Hi, this is Jim with ProfitTrading.com, and I hope you're having a great day. Let's take a look at a few of these markets here. The S&P full bars above the bands, that's bullish. Came down here and it's probably just testing this last low and will probably turn higher from here. So I still think the S&P, good chance it's going to turn higher from here. It's just the first move up and then a test. Again, I could be wrong. Remember this analyst of the market technical analysis I do every day is just my best guess at the time. It's not really like if to take the trade you really need the entry points and stops in the premium newsletters, because I can like give commentary on the market and I can always be wrong. It's just my best technical analysis at the time. Now on bonds here, it looks like a head and shoulders top, kind of an upward slanting head and shoulders top, and I'm expecting bonds to break lower from here. So and that goes hand in hand with stocks going higher, so that kind of goes to normally when bonds go down, stocks go up. So I think the stock market is still bullish, even though we've had a sharp move down here off the high. That's just, I think, a test. Again, we'll see the dollar. I think this is a top. I think this is just a lower test of the high, or the dollar could even come up and make a double top, but I think the dollar has either put in a top or is very close to a top. So we'll see how that plays out. Again, I think the dollar is very close to a top, and that would put gold close to a bottom, which is what I think is happening there. The dollar and gold normally trade opposite each other. Now that's not something that happens all the time, but it happens most of the time. Cocoa, full bars above the bands, that's bullish. That says the buyers have taken control. This move below the bands is probably a higher test of low. These markets just tend to do that. They'll make the first swing up, and then the test of the low can be a very sharp move and scares out a lot of traders, but I think that's just what this has been in cocoa. And now today's action is probably the turn up back with the uptrend. Coffee, I think coffee's put in a low. It's starting to move above the 10-10 bands. The 10-10 bands are 10-day simple moving average of the highs and a 10-day simple moving average of the lows. And it's just a good way to look at the markets. I've found I like it. You could use a 10-day simple moving average, but I just found I like the bands. I found them years ago, and it's just something that I like to use. Again, you can see the closes above the bands, and then if we start trading full bars above the bands, and the 14-day stochastic shows the momentum's up, so everything's in place here for coffee to head higher. Now sometimes what it'll do, it'll just make a low here and that'll be it, or we could get a rally into here and then it could come down and make a double bottom. But again, either way, coffee's probably pretty close to a low. Sugar, I think that market has started a rally too, and I think it's just made a sharp test of the low, like we were just talking about a second ago how these markets do. What it does is it takes off and then it slams down like this to test the base, and then it scares everybody out, and then it takes back off with the uptrend. So I think that's what sugar's doing. I think higher prices are headed for sugar. Again, if sugar were to head lower from here today, like say maybe sugar, it's a bullish day so far. If it slammed down, then my thinking on the market could change. But right now, that's just the way it looks. Natural gas, I've been bullish natural gas, and I still think that is a great trading opportunity, just for the simple fact that we're just at rock bottom prices. So even I think natural gas is just going to continue higher from here. But let's say even if it did turn down here, I think this area here is where it made this last low over here is going to be strong support, and it's just at a low. Even if it were to come down and make another new low or something, the major low is in for natural gas, I think, are very close to being in. So I would stay bullish natural gas. Crude oil, I think is right at the bottom. It's extremely oversold. It's making bullish divergences, and I think what's going to happen is it's just going to move higher from here. It's unchanged right now. Again, that's the kind of action you'll get at the bottom. It will be real narrow range, tight range. Just the bulls and the bears are fighting to for control of the market, and that's what happens that market turns. Gold's down a little bit today. Again, I think, well, actually gold's down $11, it says here. I still think gold is very close to a low. It could come down here and make a double bottom, and it could make a low right here and head higher. So we'll just have to see how that plays out, but I think gold is right at the low. Lean hogs. I put out in my newsletter, and I put out a chart on my site that I showed. I drew a line right under these lows here and this low here, and I said if it breaks that support, lean hogs is going to head lower from here. Well, yesterday it slammed down, and I think this is just the start of the down move. I think lean hogs will probably come back down and at least test this last low and probably go below it. Live cattle is in a downtrend. It's trading completely below the bands, and again, I think lean hogs and live cattle pretty much trade together. Again, it's not always lockstep together, but they kind of tend to trade together, and live cattle is bearish right now. Below the bands, you can see the bands are slanting down, saying that the trend's down, and I expect live cattle and lean hogs to continue lower. Now the grains, we went long not all the grains. We didn't go long oats. I guess I'm just going to probably skip oats for right now and maybe look for a pullback, because we got long corn, beans, and wheat, and I just figured, there was no need to just get into everything. If you were to take in any of those three trades, that would be good enough. Now, corn has just absolutely exploded to the upside here, and that is usually when a market does that. Again, I always say no guarantees. I gotta always throw that in. But I mean, when a market explodes, it made this base here, and it's exploded to the upside. That usually is the sign of much higher prices ahead. And I just think it's obvious right now that corn's heading much higher. But we still got to be careful no matter what. Now we got long corn back here on this bar in the premium newsletter, and what I'm going to do is we're holding that, and we're going to keep going long any chance we get. Like if it trades up here and then makes a pullback, I'll look to go long again. I'm going to look for, we're basically going to be looking to pyramid up in corn, because I think this thing is heading much higher. That's what it looks like now. And the same for beans, wheat, oats. Oats have just exploded to the upside. So these markets, it's a drought year for the grains. And again, I don't follow the news a whole lot, so I don't know what they're saying exactly, but I know we don't have any rain here in Iowa, and the temperatures are expected to get like 97 this week, pretty much most of the week, 97, 98, 99, right in that area. So it's hot and dry, and I think that's what's driving this. There might be other things driving it. Like I said, I don't follow the news. I mostly follow the technicals. But beans above the bands, tested the bands, above the bands, and then kind of tested the bands and then exploded higher again. And I just think it's much higher prices ahead. I think tomorrow we'll look at the weekly charts on these, because the weekly charts are extremely bullish too. Wheat, same thing as corn and beans. They just exploded higher. We went long. I should have showed you where we went long beans in the premium newsletter, but maybe we'll look at that tomorrow. Wheat, we went long on this bar, and again, it's broken through this last high, and it's consolidating a little bit right now. It's down 2 cents, but they're never going to go straight up. There's always going to be some down days and some consolidations, and when we just broke through this old high, it might have a couple of days here down to test, but I still think this thing's heading much higher, and we'll just see how that plays out. Okay, oats. Last one, I did have a buy signal on oats, and I was going to put it out just so anybody that was interested in oats, and I probably should have in hindsight, but and the buy signal would have been perfect. It would have been just right above these highs here. But again, I just felt like we're in 3 already. I felt most people that were probably following my newsletter were probably in one of the 3. And there's really no sense to be long like more than one grain at a time. I mean, you can if you want to, obviously, but really, if if one goes against, if they were to not go our way, they'd all go against us probably. So it's just kind of better to just trade one, I think. Or and if you like corn and wheat, if you got a couple that you just really like and want to be in, you could trade two. But I just thought we were in enough. But anyway, this would have been a perfect buy signal in oats, and it's taken off, and I think it's going to head much higher from here. It's completely above the bands, which is a sign of strength, and it means the buyers are in control, and the bands are turning up, so the trend is up right now for oats. So thanks for listening to my video. I hope that's been helpful to you, and we'll look at some more markets tomorrow.